Nike, the world's leading sports footwear, apparel, equipment and accessories company, and your all-time favorite sports brand.
I like this stock a lot, and of course it's because I like to exercise and all that, but really, you remember athleisure, sports luxe, all of that stuff, so that's the connection. People wear this stuff in aspirational.
And we have on occasion made you wear your Nike branded goods into the studio. Market cap, $95.7 billion, PE here of 25.5, dividend yield of 1.2%. Are you as enthusiastic on the Nike gear as Paul?
I like Nike, and I think Nike faces similar problems just like Apple, in that once you become such a dominant player, people always expect you to keep at that rapid growth or rapid pace.
To keep innovating.
Keep innovating, you know. And a lot of the shine has been taken away from Nike, especially in the S&P 500, by a company like Under Armour, which is growing more rapidly. But look, in terms of the global athletic footwear industry, Nike still controls almost 23% of that, so that's almost a quarter of the whole world. If you look at the second biggest person there, it's Adidas, which is around about 10%. So it's a fantastic company, and really the things to take away from it is not that they're doing something wrong. It's simply that they've become so big that people expect so much more from them. But if you look at the last 5 quarters, they're still growing at an average of about 11.5%. And if you compare that to Under Armour, they've only done about 4.5% average growth. So still
there's
more
no
of the
stopping.
same.
Let's have a look at the share price graph.
This is interesting because it had a terrible 2016. It was the worst performing stock in the Dow Jones out of the 30.
And we are exposed to it.
Yep, but it has had quite a nice bounce in recent weeks, and that's, I guess, because Under Armour had a bit of a stumble. Some of the run-up in 2013, 2014 was because Adidas was doing badly, and then Nike really shot ahead and so on.
So
but
let's check your level of conviction, Paul Theron. Did you buy in on the dips
Well,
into
we've
your
been
client
buying these
portfolios?
for ourselves and for our clients all the way along. This particular hot stocks portfolio, we bought this position in August of 2016, so we took the leg down, but we're now back in profit on that position. So we
But on the
like it.
downside, you have bought in for your clients.
Yeah, for sure. No, it's definitely, we think, and it's such a great emerging market story because, of course, people haven't really gotten running there yet, and the margins are great. I mean, the sports shoes, this knitted Flyknit technology was a major innovation, which has been very good for margins.
It's almost like a seamless shoe.
Correct. So you don't have to do the cut and trim with all the old fake bits of leather anymore. You just make the shoe, and it looks so much better, etc.
Hot or not? Unless there's something else you want to add before we call it?
Definitely hot spot, but what I just want to add briefly is that what I like about them is that they've also got into the technology game, especially in terms of their apps. That's where the world is going. That's the future. It's all digital technology. So instead of just focusing on making the clothes, they're saying, how do we grow our market base, bring in
and of course, all of the work that they've done on their direct selling via their website. But I think we're out of time.
We're out of time.
Yeah.
Hot.
Yeah.
Hot.
Hot.